We continue with our books of original entry. So today we're going to talk about cash and credit revenue. So when I talk about cash revenue, it means the business, the transaction that was done between the business and the customer involved immediate payment of cash. That means the customer paid the business immediately. That's why we call it cash revenue. So you don't need to record it in your sales journal or your trade receivables ledger because the business, the customer is not owning the business anymore. Yes. The transaction was done. I think that is clear.
Yes.
So go to revenue invoice or credit revenue. So for credit revenue, we're going to have what we call revenue invoice. Are you with me?
Yes.
So for revenue invoice, for credit revenue, it means when we talk about credit revenue, it means that the buyer bought from you as a business without making payment. You sold to the buyer without payment. So the buyer is going to pay at a later date. That's a revenue, a credit revenue. So it's still going to come to the business, but not presently. That's the difference between credit revenue and cash revenue. Cash revenue, it's an immediate payment. Credit revenue is a future payment. It's clear, right? So what happens when there's a credit revenue? The business will issue a revenue invoice. So the business will issue an invoice. So in the course of issuing that invoice, as soon as you are delivering or dispatching the products to the credit customer, you issue a revenue invoice. So the revenue invoice will be used. The revenue invoice will be used by the revenue department to record all invoices. So because you don't have just one customer, you have different customers, right? So each customer will have its own revenue invoice. So this revenue invoice is what you collect together, then you post it in your sales, in your trade receivable ledger. So when all these transactions are done, the business will have to open a sales day book, which you record all your invoices. And as soon as that is done, you need to open two accounts, you need to provide a double entry system. One is going to be for trade receivables. There's going to be a trade receivable ledger and there's going to be sales ledger or revenue ledger. So those are the double entry. Get the point. All these invoices will be recorded in your sales day book. As seen, scroll down, you'll see it in page 41. I'll just scroll down to figure 5.7.
Yes.
So these are invoices from different customers. So as soon as this is done, the account department will now open a double entry for this transaction. So the double entry that the business is going to open for this transaction are the nominal ledger, which you're going to put your sales account, and the trade receivable ledger, where all the invoices will be recorded. So for your nominal ledger, it's going to be a credit balance. And for your trade receivables ledger, it's going to be a debit balance. Remember when we were talking about purchases yesterday, purchases invoice, your purchases account is what? A debit balance. Remember that. Yeah. So now your sales account will be what? A credit balance. Your purchases, your trade payables ledger was a credit transaction, was a credit balance. So your sales, your trade receivable ledger will be what? A debit transaction. Is it clear? So based on the transaction we have here, we have on the sales day book, we have Gamson Sports, BY Sports, we have Delft's products, we have Zank Sports, right? So each account, you open a double entry system, like I told you earlier. So the double entry will be the nominal ledger, which you open at the last. You open the nominal ledger last. First, you open the trade receivables ledger. So for the trade receivables ledger, you record it for each customer's account. That's personal account. So you have the Gamson Sports, date, details, amount, the debit side and the credit side. But the transaction will be recorded on the credit side, on the debit side. The details will be revenue or sales. Yes. Is it clear? So for Gamson Sports, you're going to open the ledger, Gamson Sports account, date, details, amount, date, details, amount. So under your date, the date of the invoice, which is May 4, the details of the invoice, which is revenue, then the amount of the invoice, which is 480. Then the next one is BY Sports. The same way you do that. Under trade receivable ledger, so you have BY Sports account, May 12. Details will be revenue, then the amount will be $100.80. Then you open Delft products. For Delft products, date May 22nd, the details revenue, the amount 144. You write it on the debit side. Then you open for Zank Sport. For Zank Sport, you have the date, which is May 29, the revenue, which is the details, which is revenue, then the amount, which is 213.60. Then the total of this journal will go to your trade, to your nominal ledger, which is your revenue account. So now you open your nominal ledger for the double entry, because these are all debit entry, and the double entry system says, the principle of double entry states that for every debit entry, there must be a corresponding credit entry. So all these transactions are on the debit side, then there must be a corresponding credit side. So what do you put in your corresponding debit side? It's going to be the nominal ledger. So for the nominal ledger, it becomes the total of all your transactions. So which is already on the journal, which is 938. So you write nominal ledger, revenue account, or sales account. Then the date, details, amount on the debit side, date, details, amount on the credit side. So on your debit side, on the credit side is where you record it. You write date, May 31, because that is the end of the month. May 31, not 29. The end, May ends in 31. So you write the end of the month date, which is May 31. Then your details will be credit sales for the month. Credit sales for the month, that will be your details. Then the amount, 938.4. Is it clear?
Yes.
So that's how we prepare a sales, a trade receivable ledger and a sales account when you have revenue invoice. Do you understand? There's a difference between revenue invoice and purchases invoice. Purchases invoice, you have the nominal ledger for purchases account, and you have trade payables ledger. For revenue invoice, you have the nominal ledger for the sales ledger or revenue account, and you have the trade receivables account or ledger. Is it clear?
Yes.
All right.